All right, hello traders. I hope you had a nice weekend. In today's video, I'm going to make a little intraday market breakdown on how I read the price on the British pound versus the US dollar. And let's go. I have mentioned in previous videos I am a reversal hunter. I like to trade when price is likely to reverse, going from sell side to buy side. And I also like to do it in combination with a market maker buy or a sell model. So I'm primarily hunting two things. I'm hunting easy dead money in the market in form of consolidation and equal highs, and I hunt reversal patterns. So if we take a look at the price here, what's going on? This is a 4-minute time frame. This is nothing magic about a 4-minute. It's just illustrating the market structure kind of clear here, what I will show you. So during Friday, price consolidating here, and we also have an obvious level of liquidity up here, right? We have equal highs up here. So when Monday is starting, we of course has already identified this price level here, and institutional price level point, I think it's 1520. Yeah, so these highs is around 1520 here. During the Asian session, price breaks out from this consolidating here, creating a huge fair value gap, trading into the breaker right here. Yeah, and the Asian session keeps trading lower, lower, and lower. So we are down very low here. But I want to show you a couple of things. Prior to when the London session starts, we have a pretty important timing here. Here, and this is my time, we have a new 4-hour candle printing. So when a new hour starts here, we have not only on this specific time frame, right here it doesn't look like much. It look like, basically old low here, price trading through it. But if you dig into what's happening here, you have a lot of sell side liquidity triggered in here. You have 4-hour traders, 2-hour traders, and 1-hour traders. So think of the logic triggering in other time frame traders. Just because this low here doesn't look very much on this time frame, it actually triggers in other time frame traders. So we know that price is likely to make reversals during the kill zones, and from what I can see down here, we have a reversal pattern. We have price trading down low, so we trigger in. All right, here trigger in. Oops. We trigger in sell side liquidity, and we have what? Price consolidating down here a little bit. Then we get a reaction. We get a buy side imbalance created with market structure shift. So I have sell side rated here, swing high here, market structure shift here, comes down to rebalance and sends price higher. Here, this high here is a little bit, how do you say it, stronger market structure shift, because this is a 15-minute swing high, I think, rebalancing some 50-minute sell side imbalance here. So see this as a little bit more potential, stronger market structure shift. So we have here and here is when market maker models is a very powerful tool, because if we have identified this smart money reversal or this reversal pattern down here, where or what should price draw to next? What I see here is we have very equal highs up here. So all this price action here, I should see that as a market maker buy model, where we have a original consolidation here. It leaves the consolidation, comes right back up into the consolidation. So this area here gonna become what? Redistribution. So we have more sells here, smart money selling here, and price sells off, comes back up, another level of redistribution. Here, I'm not so good at drawing these boxes, but it's just for illustration. Down here, during the kill zone, we have a smart money reversal. So what? From down here, we also have a institutional price level here of 1450. Price should seek buy side now. Price should seek buy side. So every time price is creating a new price leg higher here, it's coming down and respecting what? The fair value gaps. So whenever price is creating a new price leg, this is only time for reaccumulation. If you know where price is gonna draw to next, you can just add more longs here to exit them above these old highs here. Of course, I'm not a perfect trader. I'm just a developing student that's showing you that how I would read the price. So I wasn't at the screen these times, but hey, you know, we want to learn things, right? So we have price respecting the fair value gaps, reaching up above this high. Whenever price reaches above these highs here, I see that as a buy model complete. So I don't want to be a buyer anymore because we have reached above all highs. Don't want to buy above all highs, right? And we are between the London session and the New York session here. New York session starts here at 1 o'clock my time, and it's 7 o'clock New York time. So when price is reaching up into these equal highs here, I want to see a little bit on how price is sweeping it or purchasing it, because that's maybe or giving me it's giving me a little bit of information how the New York session gonna trade, or where I can stock setups in the New York session. Let's say we had a different scenario here where price is attacking this buy side pool here very aggressive, with a peak formation here, and trades, aggressively lower. I could potentially see this as a little bit more stronger reversal up here for, continue down to keep making going lower. But that's not the case this time, and this time price makes a very weak run here. It's very, very weak run here. So when we are up here and price starts to consolidate, we can again identify this as what? We know the buy model is completed here, and price consolidating and doing what? It leaves the consolidation. So we have a potential market maker buy model forming here again. These highs here looks a little bit too obvious to me to this doesn't look like a real high formed. In my opinion, these highs here gonna be rated again. So if we identify this as a original consolidation within a market maker buy model, where should price make a smart money reversal? Well, I don't see any importance in this price leg here, so I'm just waiting to and reading the market structure when price coming down here, and I'm gonna go through that now. So we have a potential original consolidation here. Price leaves the consolidation here, puts in a low here, and coming up, rebalancing last up close candle here, and then selling off again, breaking out on this low here, pulling back, breaks down again. So when price attacking this low here, think what I have mentioned in the previous videos about the breakout, pullback, continuation, and the breakout reversal. This here, when price attacks this low here, is a breakout, it pulls back, rebalancing, fair rally gap here. So what information do we got here? Well, we know this now is a intermediate term high. Price, give it the last push down, taking out some more sell side here, and we get the reaction. Also notice we're at the institutional price level here, 80, and we get the reaction, breaking market structure or market structure shift, bullish here, swing high here, intermediate term high here. So let's see how we can do this. Here we have a market structure shift, bullish now. We have already identified this liquidity pool up here, so this is an area where price is likely to draw back to, and a great opportunity to be long is in this fair value gap down here, because we have taken out sell side, we traded down into a institutional price level, we have shifted bullishly, we have a break of a intermediate term high here, and we have a buy side imbalance here to take an entry off in a potential market, or a smart money reversal. But I'm a developing student, so I didn't get an entry down here, but if price is drawing up to here, shouldn't price respect the buy side imbalance? Yeah, it should do. And you can see my executions here. Price creating a high here, drops down into this fair value gap here. So I'm entering on this candle here, selling back right up here. So in this little piece of price action here, we have a smaller fractal market maker buy model. We have a accumulation, we have a redistribution here. So redistribution here comes back up to the original consolidation. We have a potential smart money reversal down here, marking off that with a gray box. And if this is a smart money reversal, we could enter in within the reaccumulation phases in this buy model on this price flag up, drawing up into these highs here. We can, yeah, we look for buy side imbalance to, or at least I do, to enter in on. So in this phase here, to me, is a reaccumulation phase where we can enter more longs. So if you don't identify this smart money reversal down here, you can be a buyer next time it drops down into a bullish, or sorry, a buy side imbalance. So yeah, that was a little walkthrough on today's price action on the British pound. I hope you enjoyed the video and see you next time.